It's good, right?
Mm-hmm.
Yeah.
It's good.
Everybody does.
Yes.
I've given the credit before, but I'll do it again. That's my younger brother.
It is?
He's very musical. Yeah.
I love that.
He and his friend, a guy that we do a different podcast with. The one I was telling you about at lunch.
Yeah. I was going to say, is it the guy that does the podcast with you?
Yeah.
Awesome.
Yeah, it's certainly not for children.
Yes. Oh, yes. I won't. I'll watch it alone.
All right. This is Real Estate for Real. I'm Eric Pettigo, and I'm being joined today by my first non-realtor, which is exciting and quite the honor. But Natalie Dodson, thank you so much for coming on. I'm excited.
Yeah. Thanks for having me.
You are welcome. So, for the people listening, what is your official title? Do you have one? Should I vet
the bank on my business card says Natalie Dodson, AVP of mortgage lending.
Okay.
Yes.
What's AVP?
Assistant Vice President.
I knew that. I just wanted to. Right.
Oh, okay.
Okay. You're Assistant Vice President of mortgage lending.
Yes.
At INB.
Correct.
And then, so how did you? It's something I ask everybody. How did you end up there? How did you find yourself doing what you're doing?
Well, right out of high school, I found a company that did tuition reimbursement. Locally here, it was Wells Fargo. It's where I met your beautiful wife.
Yes, you've known my wife longer than you've known me.
Yes.
Yeah.
Yep. I started there 24 years ago. Ugh. Yep. Stayed there the whole 7 years. Kind of once I got my degree, I felt like I was supposed to do something different. So I did become a financial advisor for about a year. Got an offer to go back into mortgage, and I guess I missed it enough, and I loved it, and I felt good about it, and so really, for 20-something years, I've been in mortgage. And I went to National City that got bought out by not a great company. And so I was looking for a new one and absolutely love the CEO of my bank and the person trying to recruit me there. And I made the move, and I love it. I've been there 11 years.
11 years at INB?
Yes.
Okay. Yeah, I'm trying to do the math. Because we have our current mortgages through INB.
Yeah.
Right.
Yes.
And so that was before you were even there.
The first house you bought with Amanda?
Yes. Yeah. And the one we live in now. Still,
yeah.
We're still there.
Yeah.
Now, when we refied.
Yeah.
Back when rates were insane.
Rates we'll never see in our lifetime again.
I called you up.
Yes.
We'll never see them in our lifetime again. Correct.
Probably not our lifetime. No. Yes.
And that's a good thing.
I think so. Our economy, look kind of what's happened since, right? Mm-hmm. I personally think the 4s, the 5s, I mean, that is still the average actually for the last 10 years, the 4s and the 5s. And we should be grateful to have those great rates. If you still have fortunate enough to have grandparents alive, you know that those are not what rates have been. Those are still considered amazing rates. I mean, so we'll see.
You do hear people who bought houses in the 80s.
Yeah.
Say what the rates they locked in at were in the mid to high teens sometimes.
Yes. Double digits.
What?
Yeah. Yes.
It sounds insane. Now, they were able to buy a 4-bed, 3-bath house for, $22,000.
Yes.
But the interest rates were absolutely through the roof.
Yes.
The situation we're in now, I know you mentioned the rates earlier, but what I learned on TikTok is because of Realtors' inflated commissions. It has nothing to do with interest rates. It's all Realtors' fault.
It's all your fault.
And our inflated commissions.
Totally your fault.
We have wrecked the entire housing market. Like the greedy Realtors.
Yes.
So anyhow, we're trying to make up for that now I believe we've heard the public, and we're going to start working for free.
Yeah, you should. All of us should work for free. I mean, if we, some people are hoping we have an economy, apparently, that we all work for free in the same wage, right?
Yeah. Well,
totally different podcast.
We'll be careful veering down that road.
Yes.
How important is it? Because I know, when I have a buyer and they come to me and they don't have a lender yet. Yeah. And they say, well, who do I talk to? And I have a list. Yeah. You're obviously on my list. You and I have become pretty good friends, I like to think. And so but I have a list. I send them over, say, hey, here's a few names.
Yeah.
call these people. I have good experiences with them. Talk to them, and whoever makes you feel the best,
of course,
move forward.
Yes.
Right. So how important is it to keep good relationships with realtors for a lender?
Very important. Well, relationships are always easy. It makes a transaction easy because we have to work together on, and there's several different people that come together to make a transaction come together.
Yes.
Me, you, title company, appraiser, you name it, inspector. So if y'all can work together, I think that it makes a huge difference. So rapport is a big piece of it, but you also have to keep the trust. You're sending me business because you trust my company as a whole, and I have an amazing team. I'm very, very small piece of that make that transaction smooth. So the bank is a big piece of it too.
Yeah.
Yep.
Yeah, and I think we're all kind of in relationship businesses.
Yeah,
right? But
agreed.
I know it gets hard sometimes as a realtor because we get a lot of like lenders who reach out and they want to, hey, let me take you to lunch, and this is what we're working on, and I'd love it if you'd send me some business. And I want to send business to everybody because I like all these people.
I do too.
But it's hard.
It is.
And so all I can do is, I do the same thing. I say, well, I'll put you on the list.
Yeah.
Right. And if I send somebody through you and you do a good job for them, then you stay on the list.
Yes. Well, because a lot comes to that list. One, we work well together, which makes it so smooth for our client, which then the client, they have a lot to stress about at that time. But of course, it can also be just how easy we made the process, getting to closing on time, the closing costs we're offering the client, a ton of different things come into play, right?
Yep.
I think that it's all the things that come into play. And then if we get along, then that just makes it that much easier.
Yeah.
Yes.
And for me, one of the biggest things, because I'll send over, okay, here's the contacts. And then when I hear back and say, okay, well, I called this person, this person, this person.
Yeah.
But only this person has called me back. And this is like next day or 2 days later. Then I'm like, so much of it is communication. Now, You have an excellent record, just so you know.
Okay, I appreciate that. Yeah, yes.
You are very responsive
yes.
when people call you. And that's so important, I think, not just for people in your business, but mine too.
Yeah.
Because you hear that a lot. Like the lack of communication is a problem at times.
I think a good loan officer has to have the mindset that we work when you guys work, and we do not work Monday through Friday, 8 to 5. We are a weekend, evening, morning. We have people and clients that work at night. Thank God for do not disturb, but that's okay. We want those messages. We need to respond in a timely fashion, especially in the last couple of years with multiple bid situations, all offers accepted at 6 p.m. Please, can you get me,
Yeah.
And there's just, Yep.
So it's funny you say that because I'll be out with one of my clients and, it'll be a Saturday or a Sunday.
Yeah.
And, and maybe just throw out like a hypothetical, maybe their letter says up to 200, we'll just say.
Okay. Yep.
Just to put a nice round number on it. But we're looking at one that's maybe in the 220 range and they love it.
Yeah.
And they're comfortable with that, but they,
approval.
Yeah, right. Yeah. And so I'll be like, okay, well, let me call your lender real quick. And they'll say, oh, we don't want to bother them. It's the weekend, which for one is funny because what am I doing?
Yeah,
right
I'm
now?
out here with you right now.
Right.
Yeah.
No,
you bothered me.
Who would want to bother anybody on the weekend? And I always say, oh, no.
We're past that.
I've got their cell number.
Yes.
You don't have to bother them, but I will. Yeah. And that's what we've all signed up for.
Right.
And so you probably didn't know that going in maybe to the lending business that nights and weekends also you're kind of on call, or did you know?
Well, I think it's just become different in the last 20 something years. Now everything is so automated. Before you guys were hand delivering paper like files and contracts, and you couldn't go see everything you wanted at the drop of a dime because you were printing MLS sheets and
say you guys, but that wasn't me.
Driving around with MapQuest and MLS sheets. But so yes, but it just has become easier to make it a very quick get out and go see it. And
you know what? I guess I'm becoming less and less surprised by it, but the first few times that happened, I was like, what? Like when we get to a closing table.
Yeah.
And you walk in.
Yeah.
And you say to the buyer, who I've got this established relationship with, we have gone through all these houses. They've talked to you countless times on the phone. You've got them approved. We're good. We're at the closing table.
Yeah. And
then there's a handshake. Hey, nice to meet you.
Yes.
And so we get all the way there. You go through every step of the whole thing up until closing. And a lot of times you still haven't met that person face to face yet.
Right. Talked to them a ton of times, maybe ran their app on a Saturday for you. And yeah, I haven't got to meet them. They email me their documents. They call me on the phone. They can e-sign everything from their phone, like my electronic documents. And so everything is, yeah. And I just get to meet. It's why I love to attend my closings.
Yeah. Yeah. And you're always there, which is cool.
I try to be.
Yeah. I appreciate that.
Yeah.
But I do think it's important because you work Illinois National Bank, a local bank.
Yes.
And as realtors, we love dealing with local lenders.
Yes.
I'm not here to badmouth anybody. I'm not saying anything bad about any national lenders.
Yes.
But we love an office that we could walk into if we need to.
Yep.
We love making a phone call and dealing with a person.
Yes.
And not having to, look through, oh, hold on, do you have the file number? What's the, like we love that very personal experience. But a lot of the advertising that some of these national lenders push out there is how easy it is to get pre-approved with us. You just hop online and then boom, it's pre-approval.
Yeah. And
I don't think a lot of people understand that. Not that there's not a vetting process, because of course there is.
Yeah.
But you can hop online IMB.
We are so cool. We have actually, the things that my company has done to go above and beyond to make my mortgage team and department equal and equivalent to a national large, huge mortgage lender is unbelievable, and they deserve all the props. We have online closings. We are one of the first local banks that have worked with local title companies to do e-notes, e-signings, hybrid closings. You can apply online, upload documents into a portal online, everything. So we really do try to be like your national lender, but your local bank.
Yeah, and and that makes things so much easier and so much more convenient for people, because when I tell them, these people talk to this, and like, all right, well, I'll try to find time to go in there, and whoa, you don't have to do that.
Nope.
Just make a phone call.
Yeah.
And then everything else you can just do online.
Yeah.
And it's easy. You don't have to go find time out of your day. Everybody's busy.
Yeah. To
walk in. So anyhow, I just want to make sure everybody is aware that you are able to just jump online and do it that way.
And I love the people that still want to come in and meet me, shake my hand, or maybe even do it over the phone so they can ask questions as we do the app. And it is actually just 5-10 minutes over the phone too. Right. But we do have that convenience for when you are stuck in that meeting, stuck at work, maybe on the sideline of a field with your kids, and you just need to do something really quick. Yes, it happens.
So I mentioned the vetting process, the pre-approval process.
Yeah.
So when I bought my first house, it was early 2000s.
Okay.
I was a young guy.
Yeah.
And I've told this story on here before. We walked into a bank with my dad, and my dad is a very, he's got an air about him. He's a very confident guy.
Yeah.
And he owns every room he's in. That's just the way that he is.
Yeah.
And so we walk into a bank. It's a local bank. I don't say who it is. And he says, yep, my son wants to buy a house. I had zero credit history.
Yeah.
Nothing. I'd never had a credit card. Yeah. I have nothing. And they're like, and there was a little bit of he doesn't really have a, My dad said, oh, yeah, no, here's his pay stubs. He's good. We want to go ahead and get him a loan.
Your dad, the handshake loan.
I got a house. Yeah. I got a loan for $100,000.
Yeah.
No, now it was something that we could afford, so it was fine. Yeah. But it was around that time that people were getting houses that they could not afford, and then everything fell apart soon after. So were you in the business then?
Yes. Just in a different aspect of it. And Amanda can tell you a little bit. When we worked at Wells Fargo, we had, before 07-08 crash, we had your CISA loans, which is stated income, stated asset. no proving your income. We had Nina loans, no income, no asset. You just basically, I mean, it was kind of the handshake loan.
That's crazy.
It was crazy. I mean, and you had those people that in California selling $170,000 house they bought in the 70s for 1.2, and then their kids wanted to try to repeat this, but maybe didn't have the income to. It was a little. You see where the crash came from, kind of thing.
Oh yeah.
Yeah.
Oh yeah.
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 So, like, how has that process like changed? Because I think a lot of people were expecting when the last thing happened, when rates dropped so low, and everybody was overpaying for houses by an insane amount.
Yeah.
And I heard a lot of people predicting another crash, and they compared it to the one in the early 2000s. And I always said, you know, I'm not a lender, I'm not an economist, I'm a realtor. And I said the difference is, yes, maybe people are overpaying, all that, and all that is true. But the vetting process to be able to buy a house,
yes,
you still have to be approved. Like, they're not just handing out houses like they were back then. So they're probably not going to all get foreclosed on.
Yeah, and I think that we always try to emphasize a budget. I mean, make sure you're comfortable because, you know, for example, I could have borrower A and borrower B. They both identical employers, identical debts, make the same exact money. Well, what I don't know is that this person's paying all of this, goes out to eat a ton, maybe pays daycare, you know, whatever the case may be. Like, you have to have a budget and be a realistic budget. Be honest with yourself.
I'm so glad you said that. A conversation I have all the time with my buyers. They'll get pre-approved and they'll come back. Mm-hmm. Pre-approved for $300.
Yeah.
I'll say, okay, great. Do you know what your payments are going to look like?
Yes.
Like, well, no. Okay. Ask that question first, because maybe you are pre-approved for $300. Maybe we need to be shopping at $250.
Correct.
But go ask that question.
Yes.
And it's not an exact science. There's always variables that go into what a monthly payment will look like.
Yes.
But as a lender, right, you can give them a pretty good idea.
Yes, definitely.
And so that happens a lot, right?
Yeah.
Where then they come back and they go, we're actually not gonna go up that high, even though we can, because like you said, some people like to spend more on restaurants
or travel or whatever the case may be. They have kids in travel ball and this one doesn't, you know, so everybody has their thing.
Yeah.
Yes.
So when somebody walks into your office, let's say somebody does walk in, or they call you or whatever, your very first point of conversation, when they say, Natalie, I want to buy a house.
Right.
What's the first thing you ask?
Well, funny enough, they seem to call you first. I'm not sure why.
We'll get into that too. I do. I wanted to get into that too.
But no, if they were to walk in and say that, I'd say, well, good for you, or lucky for you. The pre-approval process is the easiest piece of the whole thing.
Right.
You sit down with me. We're going to take name, date of birth, where you work, how much you make. Takes very little time. I'll let you know if I need to, documentation to verify any of that right away, and sometimes I don't. And you're going to get pre-approved. You're going to ask all the questions. Sure. Payment, down payment. Make sure you ask those, because you'd be surprised some don't. And then they are like, well, I can't afford the house I just made an offer on. But so we do that. Pre-approval piece is the easiest piece.
Okay.
Easiest. So we get them pre-approved and they have their letter, and then that's when they should contact you. And then all the fun begins. Yeah. Yep.
So the point of contact, like who they get a hold of first.
Yes.
Is interesting.
It is. Why? And it hasn't changed ever.
No. And I don't know. I don't think there's a wrong way to do it necessarily.
Me neither.
Right?
No.
But, if you go into a bank first and say, I want to buy a house, I want to get pre-approved.
Yes.
And it seems like the people who are a little more, and I guess, aware of how the process goes.
Agreed.
We'll do that first.
Yes.
They know I'm not even going to be able to go inside a house.
Yes.
Unless I have my pre-approval. So they'll go first to the bank.
They will. And sometimes you'll find those as your repeat customers, like our clients. They'll be like, well, remember, Eric, we had to get that letter last time. And then, they kind of know. We've already told them.
Right.
Yes.
But then some go straight to me.
Yes. They find you.
Like,
I like that house you have listed, or find you on Zillow, or
however
whatever.
it is.
Yeah.
And then, we'll go and, I want to look for a house. My favorite conversation is when somebody calls me, they say, yeah, we were looking in this area. We're kind of looking in this range, and they'll give me whatever range it is, 3 to 350, kind of right in there. Okay, cool. So because they hit me with that number, I assume, you must have already talked to your bank. I said, so you're pre-approved? No. We just, so how do you know you want to spend? You know how they know? Because they get on Zillow and they flip through houses, and the ones that they like best fall in that 3 to 350 range. But they have no idea.
I know. And Zillow gives these awful estimates. It doesn't include PMI. The homeowner's insurance this year is definitely off. I highly recommend maybe having an insurance agent on and seeing what their opinion of is this year. And they're just not fun to talk to, though. They're having a rough year. They're having a rough year.
They don't have time to do podcasts.
Not even in our area. They're just having a really rough year. So the estimate is way off. I mean, even homes that I think I used to estimate, $80 a month for homeowners, I'm estimating $160 at least. Oof. Yeah, it's just the last few months even. And speaking of TikTok and crashes and them saying it's because of you charging commission.
Yeah, sorry about that.
Yeah, I know. They think insurance could be, it's a struggle. I mean, it is. It's rough right now.
I have heard just on some stuff that I listen to that in Florida right now, they're just like, insurance companies are just pulling out. They just refusing to even insure.
The state, anywhere. Yeah. Doesn't even matter if it's in a flood zone, hurricane zone. They're just pulling out of the state.
Nuts.
It's scary. Yeah.
I mean, it hurts when you got to start giving some of that money back.
Yes. I know. Yeah. They're not being just a straight profitable company.
Right.
Yes.
It's great to take in money.
Yes.
Yeah. That part's awesome. But when you got to start giving some of it back.
Yeah.
Not as much fun.
I feel they're paying a little, the feds were supposed to make some statement about rates dropping even before the time they had promised us, which is next year on this magical date of like September 18th. The feds were going to come out and make a statement. And it's weird because like right before that, we saw rates drop a little bit. And I'm like, they already dropped them. Dang it. What are they going to do on the 18th? They've done nothing but get worse and worse and worse. But the news is not reporting it correctly all the time. So,
okay.
Yeah.
So about where are we at now? I shouldn't have asked you, put you on the spot. Okay.
I just feel, here's why we hate doing that.
Yeah.
It's everything. Purchase to a refi, to a cash out refi, to a good score, lower score, even the mid scores. I mean, it's just crazy.
Okay. Well, so then I guess
changes it.
We can talk about that then, the different variables that go into it. So when somebody comes up and asks you, because I know I get the question as a realtor, hey, what are rates right now? I get that. I don't know, like, what? I mean, there's a range. It's not like everybody just comes in and gets that exact rate, right?
Right. So we're all issued, the market is the market. We're all issued the same rates. Fannie, Freddie, VA, FHA, they're all issued. And you can actually Google this. It is a public document if you Google like Fannie Mae LLPA. Okay. And everyone that's watching can go out and Google this. And this document is going to pop up and it will show you like based on your loan to value, if you're at 95, 90, 80, if it's a refi, if it's a purchase, your credit score, and it will show you every adjustment it hits the rate for.
Really?
Yes. So we have actually shared this document several times because the government came out and said, we're going to drop rates and we're going to do this. And we had to even show them like, well, yeah, your bank's advertising this. And then, but look at this. I want you to Google this form. Again, LLPA.
I was going to say repeat that again. I'm
Fannie
super
Mae
curious about that.
Or Freddie Mac, LLPA. It's loan price adjustments.
Okay.
And you can look it up. They adjust rates for cash out, refi, all that. Now, some banks will automatically, without your permission, charge that to you. They'll say, we're going to give you the rate we're advertising on the billboard. We're going to do that. And what the client doesn't know is that sometimes they're charging it, the difference or the loan price adjustment that you'll see on the sheet once you Google it. We've educated our clients to look this up because unfortunately when the news came out with that, and of course there's always a delayed reaction or the news covers the topic a few days later, rates had already gone back up.
Right.
And then they're wondering why they can't get this and we had to explain. So, yeah.
And that's always tough. And honestly, it's something I'm not super educated on like everything on your side of the, it's like,
and vice versa. Yes.
Yeah. And we all kind of work together.
Correct.
And we've got general knowledge of how all that stuff goes. But, I've got a line that I hit a lot of my clients with, and it just says, that's a lender question.
Yes. Yeah. We appreciate it. Yeah.
Call your lender.
Yes.
I would rather you get good information than me trying to wing it through there. But I imagine that's got to be kind of tough for you when people come to you and they see, rates are getting ready to drop. So what are they, and what are they going to be, and it's and so you think what they're saying then next year they're supposed to.
So we'll have another Fed statement is on November 7th. And we're not hopeful for this because...
Anything else going on around then?
Exactly. We held our breath for so long on that September 18th. I mean, I even had purchase customers, I had 2 delayed closing because they swore rates were going to drop on that. That's how much the news covered it. So this was a big date. So we're not holding our breath for that November 7th date, especially because I don't even think that something could happen from any recent events so quickly on that date. So they're kind of sticking with their promise right now that we'll see an initial drop in the first quarter of 2025 and then maybe an additional one at the last quarter of 2025. I do know a lot of people that paid a lot and maybe over asking and different things with you over the last couple of years that are already looking for relief. They really are holding out and wanting to get it refinanced done as soon as possible.
Okay.
Yeah.
Yeah. And so when rates drop down to like the 2 range.
Yes.
Were you guys flooded with refis?
Obviously, we all probably closed more loans than we ever did in our entire career. Sure. And it was pretty much a 7 a.m. to midnight kind of thing, eating breakfast, lunch, and dinner. There was no COVID for us. We were in the office every day. Yes, we didn't have the bank doors open probably because of certain periods, but we didn't leave.
There was, even for us, because we worked right through COVID and everything too. But you remember that like first week that it happened where people were like scared to even open their front door?
Yeah. No, we would like leave the package and then call them from the car and I'd answer questions for them like on their loan package, like from, they would be looking at it, but I would just drive it to their house. Like it was crazy time.
It didn't take long. And then they said, well, anybody part of the like moving or relocation industry is essential workers. And then it's like, realtors back to work, lenders back to work, everybody back to work.
Yes.
And everybody was so stir crazy at that point. All of a sudden we're showing houses like,
I know.
Like crazy.
Hey, if we can't get out and go to Walmart and the movie theater, we might as well go in some stranger's house. Yeah.
And then we had to go in and glove up and mask up. And like all the lights were already on. All the doors were already open. They're like, don't touch anything.
Yes.
Yeah. That was such a crazy time. And then rates were so low. That was nuts.
Crazy.
And then that caused, I feel like, I've made videos about this too, that caused specifically the housing prices to shoot up because it brought all these buyers out that anybody who was maybe on the fence was wholeheartedly 100% off of the fence and they wanted to buy something.
Or the demand. Like, so if a house came on the market that I think we kind of talked about as a little bit of a supply and demand issue because the one nice house, everyone wanted to, come on and make an offer on it because that maybe was the one person willing to sell during COVID or yes.
And it's 100% the supply and demand because that one nice house, usually we would have that one and then 3 or 4 similar to pick from. But those other 3 or 4 just refinanced instead.
Yes. Yeah.
That was a real thing.
Yes.
It's for us, we've been dealing with low inventory ever since.
Yeah.
And we never caught up to that huge rush of buyers where our inventory went away because so many people refinanced. Yeah. And why would they, why not? I can refinance. I'll have this house paid off in a few years now. And it's, it was just, it made so much more sense at that point for so many people to just refinance to this crazy historically low rate
or term.
Yeah.
I think that
those are people that wouldn't sell then. Those are potential sellers that
I think that you'll see, I mean, I know numbers are still down historically about how many houses are on the market selling different things.
Yeah.
But I think you'll see where those people that in 2020 that refied maybe to a 15, 10 year, now they have this equity and they're willing to spend it on a new home.
Yeah.
And especially if we get down to the 5s again, that would be amazing. But even the 6s look good now.
I mean, love 5s.
I do too. I'd be happy with that, right?
5 is great. Just stay there.
Stay there.
Just land at 5. I mean, do maybe 4.8,
sure.
5.2, which just right in there.
Yes.
It's perfect. I like balance.
But you are going to have your situations. Like we have a really unique community, and also that we have our medical community, state of Illinois, SIU School of Medicine, all the people, Horseman brings in out-of-state people. People buy because they're moving for work, divorce, marriage, babies, they need a bigger home. Their dream house that they've always loved on that corner lot came for sale and they can't pass it up. So they'll always be they're always going to be buyers, I think.
Yeah.
Yeah.
Well, I mean, some people have to move. I mean, some
they have no
just
choice.
Have to move.
Yep.
So
yes.
it happens.
It happens.
What is, I had things I wanted to ask you kind of in my head going in. Like I should probably start making notes and stuff.
That's boring.
It kind of is.
Yes.
I don't want it to feel too scripted. I just want to come in and talk.
Yeah.
What's a big mistake that you see people make, buyers, when they come in and like, hey, I make this much, I want to buy you, but maybe they've got a ton of credit card debt or they own 5 cars that they're making payments on. I mean, is there are your people that sometimes have the bad credit card debt, but believe it or not, what's hurt us probably the most, I would say recently, is I don't care how young you are or how old and how much you've, tried to watch your finances. Also, another thing that happened during COVID is vehicles cost as much as a home. Yes.
Or a home that we bought in our 20s. So $70,000, $80,000 cars come with $1,000 payment. And that is rough on a debt to income ratio. That's rough. So,
that's a mortgage.
It is a mortgage.
That's crazy.
I know. Yeah. So we see very large car payments. And I don't think they can afford the credit card, so we're not seeing it that way I mean, of course there always is. Credit cards are sometimes just how people live. I know I do the same for point, you pay it off and do all the things, but those car payments and student loans all came due too. Yeah. Yes.
Yeah. Yep. And that hampers a lot of people's buying ability, right? Having that. So.
Well, and because they all came due, that is a great piece about getting pre-approved is we're able to coach them like, hey, we've noticed people around your same income level, they've filed for like income-based repayment. And that's a beautiful piece about getting pre-approved is we can coach them through a lot of different things, how to improve scores, how to maybe file for income-based repayment on student loans and different things. Like we're always here to give advice. We want you to buy a house as bad as you do.
Right.
Yeah. Yes. Yeah.
And so that's another thing. So you guys are very helpful in that sense. When somebody, like, let's say somebody comes and their credit score isn't quite where it needs to be.
Yeah.
And, to get in the right position to buy it, but you can look at what's going on.
Yes.
And you can see what's causing that issue or their debt to income or whatever. And then you can kind of help guide them through that and say, hey, listen, it's just patience.
Yeah.
Let's get you into the right position.
I know.
Let's get rid of it. And that's helpful. But a lot of people
want it right now.
Yeah.
Yes, I know. And
they don't have that patience.
They do not.
And they want it right now.
Yes.
And so they're willing to maybe, I don't know, sign up with somebody who is.
I know. Yeah.
I
know.
That hurts, doesn't it? I'm sorry.
You feel bad for them because you know that they need a repair. You hope they're in a good financial situation. In an ideal world, when you look at their situation, you're just like, oh, but I would love if they could get that paid off before they had a mortgage payment or this. You want that for them. But of course, if I can approve them, I'm going to, because again, they will go down the street and get the yes that they maybe don't need right now. But we would love to help them and let them know that if you were to just call the company and, get caught up on this $1,000 card or this, whatever, then it would make a huge difference. So you
got to be careful with that yes down the street.
Yeah.
So when Amanda and I, before we bought this house and we were on the market and we were looking and we went down the street to get a yes because we went to a local lender and we didn't like
the answer.
We didn't like the answer.
Right.
So we went down the street.
Yep.
And they gave us a much bigger yes.
Yes.
And we were excited.
Yeah.
And we went and found a house that we loved. Thankfully, when I went into the office to say, hey, but what's our payment going to look like?
Yes.
Right?
Yeah.
And then I got hit with that.
Yeah.
And immediately some things became clear. One was, like we talked about earlier, just because you were approved for this amount doesn't mean you need to be shopping in that price range. Two, I learned what PMI was.
Yeah. Oh, yes.
So would you mind maybe shedding a little bit of light on what PMI is?
Yes.
Because a lot of people have no idea, for one, that it even exists.
Yes. And that's another thing that helps, like working on your credit and different things, because back 20 years ago when you guys bought that house, or
it wasn't quite.
Yes.
2011.
Yes. Yeah. But PMI I felt like was this standard, like couple $100 just smacked onto your payment.
Yeah.
Now PMI is tiered for different down payments. So from at your 3%, 5, 10, 15, and then you have none, right? So you have no PMI if you put 20% down on conventional. FHA has changed it. They have it for the whole life of the loan until you can refinance out. So something to keep in mind. But PMI is tiered. So better credit score people, debt to income ratio, all the things do make a difference now. So I have some people, their PMI might only be $30, $40, $50 a month. And but it is so that so let's say I gave you a yes and I got you approved, but you didn't really like the rate or you didn't like the PMI factor because you are asking me a breakdown of your payment. If we work on your credit, that does help those things. Yeah, helps rate, helps PMI, and gets you that lower payment. So we can give advice even when we are getting the yes.
Sure.
Yeah.
So, and you brought up FHA, which is good because I kind of want to touch on the different just types of loans.
Yeah.
That there are, and you guys do
all of them.
All of them.
Yes.
Everything, right?
We have all the programs, grants. So we have your conventional standard loan backed by Fannie Mae and Freddie Mac. Everybody's probably heard that name a little bit. Mm-hmm. Then we have your VA loans for our veterans. FHA is a wonderful program too. It used to offer our lowest down payment, but conventional has kind of tried to become competitive with that a little bit. Does allow us a little bit more leniency maybe on debt to income ratio. Maybe you've had a bankruptcy in your past. Some things that just we need some help with, but no big deal. Like it offers a program that we can look at.
FHA is like, it can be a good, just get your foot in the door of property ownership type of loan, right? Because it's 3.5% down payment.
Right.
Correct?
Conventional does have the 3. FHA has the 3.5, and it can get your foot in the door, but then that's where they have to come talk to their realtor because certain houses. Yes. I know.
Right.
We could go down another rabbit hole.
I mean, and we can a little bit, right? Because with FHA and with VA and with rural development,
and we offer that as well. Yes.
There's the appraisal effect that kicks in that freaks people out a little bit. So if I've got somebody looking in maybe the 150 or under range, and we're looking at a lot of older houses that are 100-year-old houses in Springfield, but they're FHA.
Yes.
I know I've got my work cut out for me.
Right.
Because there's going to be an electrical issue. There's going to be peeling paint.
Yep.
There's going to be something that
handrails.
GFIs.
All your things.
Something that gets flagged on that appraisal. Whereas with a conventional, an appraisal is more or less just a valuation of the property, right?
Correct.
It usually doesn't get much deeper than that. But sometimes I've seen it.
Yeah.
Where with a conventional loan, the appraiser wants something done still. And I'm trying to think of a specific example.
The only time I've really had it come back where an appraiser just did not feel comfortable making a conventional appraisal and as is, they make it subject to, and when you get pre-approved or Eric talks to you, that you can definitely ask more questions on that. It's just determines if the appraisal is going to dictate and a repair being needed, is foundation. Sure. I feel like.
Yes. And I think that's exactly what it was.
I think because that's a safety issue. Mm-hmm. I think that they have to put it on there because it's a safety. Yes.
Okay.
Yeah.
All right. And so it's something we also kind of touched on at lunch that maybe we can bring into this a little bit is just how much information realtors are putting on the contracts.
Yes.
And certain things that, we get kickback from the bank that say, hey, get this off of here. if you're leaving a kitchen table behind, that doesn't need to be on the contract.
Right.
Because how much can that stuff kind of muddy up the contract when people start writing, kitchen table, pool table, mirror in the bedroom, and, that kind of stuff.
We don't like the extra mud. Yeah, it muddies it up. There's a lot of changes to the contract recently. We've even had one just in the last couple of weeks we've noticed changed where you guys used to create a separate addendum for like appraisal gap or escalation clause. I think who you're talking to determines what that was called.
And for the record, for anybody, an appraisal gap is, with our contracts, there is a built-in contingency on appraisal, and that's for the lender. You guys order up an appraisal on buyer's behalf, and that if that valuation doesn't match the sales price, then we've got a little more work to do. To get everybody on board. Now, in
layman terms, it's basically stating that you're going to pay this for the house no matter what the appraisal comes back at.
Yeah, exactly. So that gap, then that we can write in that gap coverage, we can say, in the instance of a short appraisal, we are willing to pay up to this amount as a buyer to cover that gap.
Yes.
And it became really, really popular during the super competitive thing, enough to where we had to put it into our contracts where it wasn't before.
Right. So it used to be a separate addendum, and now it is on the bottom of page 3 of
built in,
our Central Area Association Realtors contract. I know every market, and I live in all 50 states, so it's all different, but we have recently in our market put it at the bottom of page 3.
Right.
And, a lot of people get a copy of that contract. So including appraisers who just so happen to know exactly the dollar amount of different appraisal gap agreements and escalation clauses. So, and I
know I told you this, but when that happened, when that landed on the contract and I saw that, immediately my head went to, I'm not an appraiser again. I know, general info about their job, but not
me neither. It's a very extensive report. I do know that. Yes.
Yeah, yes.
Very long. Yep.
But to me, when I see that on there, I go, is that going to be a giant red flag or a big flashing neon light for the appraiser when he comes through that says, these people feel like they're overpaying for this, apparently, so. Yeah. And with all of the prices going up so much, it had to make their job so hard anyway. But to me, it almost seems like...
But they have paid so much for so long that the comps now exist.
The comps are there.
The comps are there. Yeah.
Yeah, but that appraisal gap part that's now on there makes me... I don't know, a little bit do we need to draw attention? Do we need to mention anything about a short appraisal? Because I would rather not. But
Yep, I agree.
They come back how they come back.
I know.
And so people, I think, as far as appraisals go, think that you guys hire an appraisal like you call an appraisal company.
Oh, no. Yeah. We have appraisers on our list. An appraiser, actually, to be on a bank's list, has to go through, they have to give us their license, 3 examples of previous work. It's not just right. So then we have a list, and our system, when ordering, it has to pick it at random because we can't influence or sway value. That's a rule. That is.
So okay. So it picks somebody off the list at random.
Correct.
And then what if they can't do it? What if they can't get it back in the correct amount of time?
Sometimes
go to the next name on the list.
Right. So sometimes they accept the order and hope that they can send us a message that says, "I saw that your due date was this. Could I have 2 extra days or something?"
Right.
We don't find that a lot right now, but if not, then yes, if they decline it, goes to the next person.
Fair enough.
Yep.
All right.
Yes.
So the appraisal happens.
Yep.
It comes back. Everything should be okay, right? Everything looks good, but then it goes to, this is again my general understanding.
Yes.
I'm guessing in my mind, it's a dark room in the basement that is cut off from the rest of the world and nobody has access to it. And you have to scan your Retina to even get in there. And that is where you guys hide the underwriters.
Yes.
Right?
They are in that exact room.
The most inaccessible people in all of the real estate, the underwriters.
They want to be in a room like that. But we can walk and see them. Now they are behind a locked door, like they are only in our bank. Only because of the building they work in. They are amazing. We have the best freaking, no, we do. We really do. They even try to find ways to make like our clients' rates better, their programs better. Like they are always they really are wanting to work with us, but they are not in sales. So they want to be in a Retina accessible room. They are so funny. They would laugh. I hope they watch this because they're going to laugh. They giggle.
I don't know. As long as I've been doing this, I've never met one underwriter. I don't know who they are. I couldn't name one. I have no idea. I just know that like, it's like, all right, well now it's just, we got to send it to underwriting. We've got to check with the underwriters. And every time
pray to the underwriting gods.
Okay.
Yeah.
Just the underwriters.
I know.
So what is an underwriter's job?
Believe it or not, they follow.
Or do they even tell you? Just stay upstairs, Natalie. You don't want to see what's going on down here.
Pretty much.
We are underwriting.
Yes. No, it's so funny. Oh my gosh, that's so funny. If you could, they are like this hidden little clan of people.
Do they all dress the same?
No, not at all. So funny. They are a cool group. We have an amazing group of underwriters, but they are basically just looking through your file, and they follow it to a T to Fannie Mae, Freddie Mac, VA rural developments guidelines. Now there are banks that have what we call overlays where they can have their own rules on top of standard underwriting guidelines.
Okay.
We do not try to do that. So
fair enough.
Yes. But they are through your file with a fine tooth comb.
Yes, they do.
Yes.
They are the most powerful people in all of real estate, and nobody knows who they are.
Yes. Oh my gosh, it's so funny.
It's the truth.
I know.
Yeah, none of us know any of them, but that's.
I know.
They
control our whole situation.
They wield a big sword.
They do
in real estate.
Yes.
So yeah, they control all of it. And, So anyhow,
they are in the beginning and end of the process. So how I explain it to my clients is you find a house with Eric, then I'm going to send you a list of documents, and you're going to work on that list of documents while we wait on appraisal and title work. Yeah. Once we have that initial list of appraisal title work, we pretty much have a complete clean file. We send it to the Retina room, the infamous underwriters, and they review everything, and then they come back and let us know if we need anything for clear to close. Sometimes we need a few things, and then they get to view it again.
So one of the reasons I always tell my people, hey, just go with a local lender, right? Yeah. Because I have had multiple instances before where somebody got online, clicked a few things, got a pre-approval.
Yes.
We went out shopping. And this is, early in my career. Yeah. Before I, had multiple experiences like this to where I had some, I had a little bit to fall back on to say, hey, listen, this happens. But where we get under contract. Yeah. And then a couple of weeks before closing, when the file lands in the underwriter's hands for these big national lenders, everything falls apart because there was something that was missed on the front end. And I don't know exactly what you do, but I feel like if I send somebody to you personally, you're not going to have me out shopping with these people unless they can buy a house.
Well, there are some big national lenders that have the automated pre-approval letters.
Yes.
That is so dangerous, especially because, our self-employed borrowers, they'll stick in what their average monthly income is. That is not what we get to use on a file. I mean, and now we know we're smart enough. We've learned you guys have really learned your lesson the hard way, the realtors have. So we kind of know, but.
Some of us.
But we are really trying to, we also get to view we call them findings of what Fannie Mae and Freddie, they'll tell us kind of what they're looking for on this file when we run it through their system. And so we have the preview of it. But those big companies, man, they have these things called queues. Like you'll submit a file and it just sits there and you're in line behind 5,000 people nationwide and you're lucky it takes too long. It just, I don't know. I don't know why smaller companies, we just have it. We do it better.
Yeah, I think it's just more of a thorough vetting process on the front end. Yeah. Because if you can just pump out pre-approvals like crazy, everybody pre-approval, and then catch it later.
Yeah.
I mean, a deal falls apart, it falls apart. You've still, you've pumped out, 100 pre-approvals and 5 or 6 of them fall apart.
Yeah.
Big deal to you as a big company.
Agreed.
But,
and then in some markets, they just don't know any better.
Right.
Yeah.
Yeah.
And then there's markets where like for example, I'll have a lot of my Florida people, they keep coming back to me because like there'll be things where like their title companies on there want to charge this weird fee for a survey that's actually not required by anybody on any piece of the transaction, not title, not underwriting, not anything. And so I'll tell them that, and we just don't order it. And so I saved them. And on top of that, I'm not a broker charging a large origination points, all the things. My closing costs are better. So it just, some markets they don't know there's no different.
Right.
Yes.
Right.
Yeah. Yeah.
You brought up self-employed.
Yes.
And so I think that's maybe a good thing to touch on a little bit too. So how tricky can that be, right? And I know just for me, anytime I have to fill something out, being self-employed, where it's like, what's your yearly salary? And I'm like, I have no idea. What do you mean? We're like, hey, sometimes it's this, sometimes it's this, which is great. But then sometimes it's this, which is really scary.
Yes.
So, like, how do you navigate through that as a lender when you have people who come in like realtors, for instance, who have wildly fluctuating incomes?
So first, I always tell them, listen, you're the backbone of America. Small businesses, business owners, self-employed, like we need them, right? They really are. It's just unfair.
So you stroke their confidence a little bit first. Hey,
before I kill it. Yes. So like it's because the mortgage world is just not.
We love you and we're thankful for you.
Yes.
However.
Yes. How I explain it is I'm like, okay, we know you make this. We see it. We see it flooding into your tax return.
Yes.
But you have a really amazing accountant and a CPA, and you should, because who wants to pay income tax on this amount? So your accountant does his magic, and then Fannie Mae and Freddie Mac make me use this number.
Yeah.
That you pay. Yeah. So that's the best way, the easiest way to explain. I don't get to use the fluffy income. I use the
after everything gets trimmed off of there and
tax deductions, gas mileage, whatever. Yeah.
No, that part's tough.
It is tough.
So, but ultimately, you do get it down to a number, and you have to use that number.
Yes.
Right.
Yep.
I know that there are people who go in and they don't like what they hear.
Right.
And they come back and they almost think that it's you.
I know.
Saying, no, I won't loan you this amount of money. And I always have to say, no, it's. Yeah. You have to meet the rate. They have requirements they have to meet. It's not somebody's decision to yes or no.
Yeah. And so underwriters, funny enough, here's that magic word. They don't like to necessarily just set and go through, because some people have your 2 personal returns, multiple business returns, K1s, W2s, it doesn't matter. Lots of terminology I just threw out there, but a lot of things can go into.
Sadly, I know what all those are.
Yes. Yeah. But they go into however you're paid or you file taxes. And we do get a second opinion. We actually have a national company that will evaluate tax returns and try to squeeze as much income out of it as possible.
Okay.
And they'll actually back our underwriters. Now, our underwriters know how to do that as well. You're taught that. You're taught how to evaluate self-employed. But just to make sure, we do have a system. And the income that we use is not IMB's guideline. It's just a guideline we're following, again, from the government guidelines that rule our world.
Yeah.
So, yes.
Okay.
Yes. So yes, I have to tell them that too. This isn't just IMB's rules. So if you have any questions for me, you need me to go back on anything, you need me to further explain, just let me know. I'm here to help you understand it.
All right.
Yeah.
And so then are there it almost seems like, are there some company guidelines as well kind of worked in there?
Yeah.
As far as minimum credit score or anything like that? I guess.
So our self-employed borrowers sometimes have a relationship with our commercial lenders or our business lenders because they own businesses. So they might not get a fixed rate through Fannie or Freddie, but they can maybe get a loan through like our commercial or business side because they have that relationship. They don't qualify for standard financing. So yes, certain apartments within a bank, because that's our own risk. That's not
so like an in-house
deal.
Yeah.
Yep. Because Fannie and Freddie, they're not backing our loan. So it's just IMB's risk. And so of course we can be as adverse to risk as you think.
Sure.
Yeah. So the bank would probably have stricter minimum score guidelines than even, believe it or not, a standard mortgage.
Yeah.
Yeah.
That makes sense.
Yeah.
Well, I mean, it's you're assuming a greater risk, right? If you guys are
Right.
doing something in-house.
Correct.
Which, is that something that you typically do not want to do, or does it matter? Do you want me to not ask that question?
We will always evaluate every situation as it comes in, especially for unique situations,
Sure.
Self-employed being included in one of those unique situations. But we always want you to be able to go with a standard mortgage if possible. And actually, if we evaluate your loan for an in-house, one of the first things that we do is see how quickly you can go into a fixed rate. We evaluate the situation to say, is it just this one fluke thing, or, kind of thing.
I see.
You think he could refi in 2026 or yes.
Okay.
Yeah.
All right. Let's talk a little bit about dealing with investors. You brought this up kind of over lunch a little bit.
Yeah.
So how different is that? Obviously if I come in to just get a mortgage, because on a house I want to buy and live in.
That is way, way, way different than...
Right.
Yes.
But now if I come in and I find this,
rental,
this duplex...
Yeah.
That, I've already got a house. I live in a house, but I kind of like to invest in this duplex.
Yeah.
A little bit. Like, how tricky is that process? Is there still a set amount down?
Yes. Minimum 20, but
Okay.
as you buy multi-units, even more. It can be upward 25, 30.
Okay.
But that is just evaluated a little bit differently. Well, one, your debt to income ratios now have to support your primary residence in your new house. You also have to have the money down plus extra, what we call reserves. Underwriting likes to see that you have so much money set aside outside of the down payment.
Okay.
Like if anything were to happen, can you sustain having 2 homes for a couple of months?
Right.
Kind of thing. Yeah.
So what if it's one that you buy it and it's already producing income? You're just taking over, and there are renters in there with leases and money's coming in. Does that viewed more as an asset then, instead of do you still have to qualify to?
So that's called a hard money. There's different terminology for different kinds of loans.
Okay.
So your standard Fannie Mae, Freddie Mac, sorry, I keep saying that. I just want to let you know, your standard conventional underwriting guidelines state that because that lease was written under the current owner, you are not the current owner. You're not receiving that income.
Okay.
We don't know how you're going to file it on your tax returns. Really, that house has nothing to do with you yet, other than you're trying to buy it and maybe turn it into a rental. They actually don't even have to sign a lease with you, your current tenants. So that we will not use that in a standard conventional loan,
All right.
the current income, until you own it. Then we can use it towards your next transaction.
Okay.
Okay.
I see.
Yes. Now, there are loans out there. There are some really, not shady. What was I about to say? Not shady. It's
creative?
Creative. Thank you. Creative. National lenders that will do these weird loans just for investors.
Okay.
Yes. They're very different and unique. But you have to almost get them off their books in 18 months. There's this really high interest rate. There's these weird provisions about them. So you have to be careful.
All right. And then it seems, unless I'm going crazy, it seems a lot of people in the last, 5 to 10 years have really wanted to get into the property investment world.
We have a couple of people that we've helped in the past that have thrown our name out on a couple of random podcasts and TikToks and stuff. They are not teaching them about underwriting guidelines and what to expect. They'll just have them do very bizarre things like open up LLCs when they don't know what that is. They'll have them do, but then they also, so they have, I think it's called the 3 R's, where you renovate, refi, repeat.
Okay.
So you buy a rental, you renovate it, refinance to get the equity out so you can buy your next rental.
Yeah. I've heard of that. I've heard of that too.
Yes. So here's where that doesn't always work. Like it has to be a market that can withstand that. Like our market, you can't always find the $100,000 foreclosure in a $200,000 neighborhood. So for example, yes, we were even put in a different news article, I think on Newsweek or Money Week, where the central Midwest is a very high rental potential. Like you can buy $50,000 property and rent it for $1,000, like your profit, your cash flow is going to be high as an investor. You can't do that in California and buy $1 million house and rent it out for profit, right?
No.
So we have a very high rental potential here, or cash flow potential here in the Midwest. You can't take a $50,000 property and make it $150 just because you renovated it. If it's in the neighborhood it's in, the comps are the comps. It is what it is. So we've had some people get in trouble where they think that that's going to benefit. And then now they owe more than what we can refinance from this hard money lender. They use the hard money lender to renovate because they give them, by the way, that they also give them cash on top of the purchase price. Not allowed.
Smart.
Yes.
Yeah. Super smart. Yeah. Okay.
Yeah. And you feel bad for them. They've gotten themselves into a sticky situation.
Yeah, I have heard of that. I've heard of an investor guy that I know. I don't think he does it anymore, but he was telling me, he's like, okay, yeah, no, this is great. He goes, they did a lot of the We Buy Houses stuff all over town, and it's nobody at our office. But it's, and so this guy was, he cast a wide net, and he would go in and not offer much money at all.
Yeah.
Right. And
and
hear 100 no's before he got to a yes.
Right.
But on that yes, he would get a property that was maybe $10,000, and he'd buy it cash, $10,000.
Yeah.
And then he said he would spend maybe $5,000 renovating it.
Yeah.
Renovating it.
Yes.
And then go to the bank,
refinance,
get it appraised, and take out a loan on it, and then.
Now, in this person's defense, if he's local, like you said, maybe not with this office or wherever.
No, not a realtor.
Okay.
Yeah, somebody
an investor.
Right.
Okay. So the thing is that these people that they're from California, Vegas, Atlanta.
Right.
They do not know our market. They don't know our neighborhoods. I understand the cash flow is here, but you still have to know where you're buying. Yeah. You have to know the potential of what you're getting yourself into. Someone local, at least he knows, like, oh, this is Chatham, great school district, great this, or this person that thinks just because they're buying in Springfield, Illinois, and they have no idea about our markets from California, but he's buying, in the middle of a bad neighborhood by, wherever on the other side of town, then it's just, he has no idea. He can't put 50 grand into that property. Right. Okay.
And he knew, and I had never thought it was, to me, when I first learned that was a thing that happened, it blew my mind.
Yes.
Because he's like, yeah. And then I just go to my bank.
Yeah.
And, I basically take out a loan on this house that I own.
Correct.
Flat out anyway, that I'm now into it for $15,000.
Refied it for 50, 70.
Yeah. The appraisal comes back at 50 or 60. Draw that cash out of it.
Go do it again.
Stick a renter in there. So they're paying my loan on that. And then I take that money, go do it again.
Yep. Yes.
And I was like, what?
And think of even
blew my mind.
Well, think of the market now and how that does take a watchful eye. He's probably you have to be ready to literally probably snap on that. I mean, that situation, because those don't come around all the time. So.
And where you have to be careful, and I think this is what you were bringing up, is when you listen to investors who are giving advice on a national level.
Yes.
To everybody.
Yes.
Because every market is different.
Very different.
And their approach and what they have done may have worked for them.
Right. But
it may not be the best approach for you where you are at and where you're wanting to purchase property.
Correct.
Right?
Yes.
So it's just a cautionary tale. Talk to your bank.
Yep.
Talk to some local agents who know property values and know, if you put this much into it, it could be worth this much.
Yes.
That kind of stuff. Don't just listen to a podcast with somebody who owns 30 properties and they tell you, because in New Mexico, this is how it went for them.
Yeah.
It might not work for you.
Well, and they have to understand too that a couple of those big like success stories where people are like, we became investor millionaires and we don't work anymore and all this, they were patient. Patience is hard to come by anymore, just in general, with what people, want in their homes, what they're looking, even in 20-year-olds wanting the, biggest thing instead of their first time home buyer house. But what I'm saying is like, they don't realize that some of those success stories were because they just didn't realize that they stayed in their house for 10 years. It ended up going up, double in value. They were able to take some great equity out and start this venture. They weren't able to do, like, they're wanting to buy, you'll have people call you, they're ready to buy 10 properties in less than a year.
Yes.
Yeah. It's scary. Mm-hmm. And they don't even know what it's like to be a landlord, like anything. And then the out-of-state people don't realize management fees cut into that.
Yeah. A lot.
Yeah.
People want to cannonball right into the deep end.
Yes.
So are you noticing a lack of young people applying for, for just not investment stuff, but just for houses in general? Because that's the narrative, is that young people can't buy houses anymore.
Well, it depends on how good car loans,
Right.
student loans. And then, we live in a city, but we really are surrounded by farm. We have your good old boys that, believe it or not, could, they'll still buy a house at 20.
Yeah.
And different things, but it probably is, it's getting rougher and rougher.
It sure is.
Yes. Yep. People are staying at home longer. They don't know what they want to do. They don't have a job. Yes.
We tell our kids, you hang out here as long as you want.
Yes.
Save your money when you're ready. You know what I mean? Yeah. We're not pushing you out. You stay here and save your money.
Yes. And don't be scared to drive the $10,000 cash car that you saved the money for by living at home, or anything like that.
Oh, no.
Yes.
Listen, Natalie, I've got 3 kids.
I know.
That I've got behind the wheel of a car.
Oh, my gosh.
So... yeah, and
insurance, is a totally different name in your household. I know, yeah.
Ugh, it's a bad word, like underwriters.
Yes. Oh, I get it.
But all of our cars we've got good deals on.
Yes.
None of them are super expensive, but they're all dependable, nice enough cars. So
they're running
anyhow,
this week.
Yeah, this week. Yeah. So no, well. You hear that, young people? You stay at home, and then when you're ready, you can move here to Central Illinois. We're still kind of protected.
Affordable and all. Well, and speaking of student loans and stuff, a totally different kind of thing that they're coming out with now, with different financial magazines and talks, and even some people I follow for investing in the market, is ROI on rate of return on going to college.
Oh yeah,
what they're seeing in our young people right now. College resulting in a job. I know.
Yeah.
I know. Yes.
I'm also,
yeah.
I'm not pushing my kids towards that either, if that's not,
I mean, I get it. We have both sides in our household as well. Our son is in the labor field, as well. So but we also have one college,
Sure.
Yeah. So we'll just see.
Yeah.
We'll see how it all plays out. But economy is a little different these days. Yes.
Yeah, we're all hanging on.
Yes. Yes.
Okay. We are at over an hour.
Oh.
So
okay.
How'd you feel? Let's go. Okay.
Yeah.
Not too bad. All right.
Not too bad. No.
Right. Is there anything I'm gonna have to edit out? Do you feel like, or we do?
No. Hopefully not.
Good, because that takes a lot of time. I'd rather just upload it.
Yes.
It's so much easier.
It's so much easier. Get a second opinion.
Okay.
Yeah.
Deal.
Yeah.
All right, Natalie, thank you so much
for having me.
For jumping on here.
I appreciate it.
But you need a mortgage, you hop on imb.com. Is that what it is?
Yeah. The imb.com/Natalie Dodson. You'll find all my stuff.
Awesome.
Yes.
Thank you so much.
Yes, thank you.